Frigid temperatures and tariff woes across the U.S. are taking a toll on the housing market, according to a slew of data this week. Housing starts fell sharply during January, while permits inched up slightly, though a decline on the year-over-year basis. Homebuilder confidence for February also dropped to a 5-month low as builders remain cautious about the future. Joining me now, we've got Jim Tobin, who is the National Association of Homebuilders CEO. Jim, good to have you back on the program. Just want to get your read through the state of the housing market as you see it.
Well, I think right now it's stuck, is the way I see it. Between, I'm reading this week with a drop in five points on the HMI. Not surprising, given what you said, the tariff woes, immigration, of course, the pace of the new administration and uncertainty around the market. Plus, we're also looking at a stubbornly high mortgage rates, hovering near or close to 7%. The existing market continues to be locked up, and I think builders are starting to wonder how soon we're going to see this recovery we've been hoping about.
And so what would be the key to that recovery? Is it actually just lower mortgage rates from here, or is it more supply actually entering into the equation?
The only way we're going to build ourselves out, or the only way we're going to get out of the housing affordability crisis we have across the country, is to build more houses and apartments. And so that's a combination of things that are going to allow us to do that. Number one, we need the regulatory environment to get better for us. We're hoping that President Trump will do that from his perch at the top of the government pyramid. But we're facing headwinds with potential tariffs. We already have tariffs on Chinese goods coming in. There's the hovering threat of tariffs on Mexico and Canada, our two best trading partners. In fact, the president last night announced potentially another 25% tariff on Canadian lumber. We get 30% of our lumber from Canada, and that will certainly crimp our ability to build more houses, but build those houses affordably.
So that seems like, at least from what we're talking about here, and hoping that we were going to see help coming from President Trump on the housing front, it seems like a double whammy, though, is actually happening here, both on the supply side and building out some of these homes because of the potential for these tariffs to be enacted. And the question remains of how long they would be on the table. But then also on the employment side, as you're seeing even more of a crackdown on immigration and some of the workers that would potentially help build out some of these homes.
Yeah, it's definitely mixed signals here in the first month of the administration. The president signed an executive order on day one that was trying to direct his government to help build more housing and build more housing affordably and drive prices down. But yet the immigration enforcement actions we're seeing are having a chilling effect on the construction workforce. The threat of tariffs, again, potentially layering on more costs, whether it's on appliances or whether it's on lumber and building materials. That's really running counter to that executive order in our mind. Again, we have not seen the regulatory rollback we have, but it is early days, and we expect those to come over the next months. But we do have these mixed signals, and you see that in our HMI reading, where the builders are, when they're looking forward, it's not as rosy a picture as they thought just a few months ago. So still a long way to go, but there are some headwinds in front of us.
With that in mind for the builders, I mean, one of the popular things that they've implored is doing the mortgage rate buy downs. Do you see that being something that is not going away anytime soon?
It depends. The larger builders are going to have a better capacity to do that. In our reading this month, we saw that incentives are actually falling out there. I think that's just more the lack of traffic than it really is whether those incentives are working. But smaller builders that build the bulk of the housing in this country, they may not be able to offer those deeper discounts on rate buy downs. It's still a valuable tool, especially as you're trying to get mortgage rates down from the high 6s into the magical 5s. But it's going to take a little bit of time and a little bit of work for buyers to come off the sideline and feel that the biggest investment they're going to make in their lives, that they've got a good runway to be able to pay that mortgage and afford that home.
I want to try and squeeze in two more quick questions while we've got you, Jim. Number one, how is affordability impacting the regions that you're seeing as hotspots right now?
Well, if we have to build more houses anywhere, of course, the hot spots are the southeast and the southwest of the country, kind of the Sun Belt. We continue to see people want to move down there, whether it's for the lower regulatory environment. Lower home prices are really driving a lot of that in-migration from across the country. But again, we're seeing these pressures starting to put on those markets like Dallas or Houston, or the Miami markets and Orlando markets. So it's everything is starting to impact. Again, tariffs and immigration policy are really starting to squeeze every market in this country.
Well, also a consideration for two of those markets that you mentioned in Houston and then additionally in areas like Miami, Florida, is, of course, climate. How is insurability in some of these climate areas that have been more prone to potential billion-dollar disasters as measured by NOAA impacting the purchase propensity that we are seeing right now because of the insurability?
People still want to live on the coast, so they want to live next to rivers. They still want to live where they want to live, and insurance is going to be the next big affordability crisis we're facing. We're already facing it. In some instances for multifamily properties, I've heard 200 or 300% increases in their annual premiums. Again, that's going to get passed along to renters. Same thing with home buyers. If they can't afford the insurance product on a home, they're going to look other places. So I do think that the insurance crisis in this country is going to start moving people to those lower risk markets. Perhaps in the Midwest, where you don't have these the threats of these natural disasters. But insurance is something we're watching very, very carefully. We've got to get our hand on it. Again, it's going to be the biggest driver of affordability in the next few years.
Jim, always a pleasure to grab some time with you and get your perspective. Thanks so much.